Good afternoon. George Cavaligos for HFT Bonds and Notes. Oh, look at that. The 10 years trading 133 even, and the bonds are trading 147.23. Wow. Okay, well, we're bouncing off the lows a little bit. I'm surprised we didn't bounce more with a very good 7-year auction. I think it's amazing that there's like a free money trade here almost. If you were a dealer and you could buy the 7-year in the auction today, well, you buy it from the Treasury today. Guess what the Fed's buying in the buyback tomorrow? 7-year notes. Oh, one day. That's it. I think part of the reason the market isn't rallying more is because the dealers are long up here now, and I don't think they were fully hedged. The volume today in the 10 years only it's just turned 700,000 with I don't know an hour and a half to go before the pit closes. It's a lot less than we've seen lately. I still think the market's okay. We've been in this range up here between 132.24. 28 on the downside and 133.08 11 on the top side, except for that brief spike up the other morning, and that's kind of messed up a lot of the range trade stuff that I like to do because of that spike. I keep looking for a C wave down here, but that spike kind of messed up the count. I'm not sure. I can give you objectives down to like 132.20, 132.10. But I just don't see the market getting there. We're just going to sit up around here. Like I want to say in the last 3 weeks we've closed the 10-year at 133 even plus. I think tomorrow's weekly close could be at 133 even plus again. So depending on what your risk parameters are, if it gets to 0809, you want to sell it, and if it gets down to 132.24, 26, you buy it. And that's my plan. If I see a dip tonight, the London hedge fund guys have been long. We've been seeing those dips in the morning as London comes in, as those guys lighten up on their longs. We saw a couple big dips the previous 2 or 3 nights, big, relatively big I should say, but we haven't broken out of the range. So I think again we'll go with the same plan. Look for dips out of London, between that 2 a.m. to 4 a.m. Chicago time frame. If we get them back down to those levels, we'll try to buy it. Or you know what? We might even want to wait until the GDP data tomorrow. 3.1 is the biggest GDP number we've seen in quite a while. That's what's expected. An over 3% GDP number is, I don't think we've seen one like that big in 5 years. A lot of it was inventory build. I think a lot of screwy stuff in there. I don't think we're looking for the upcoming GDPs to remain that strong. Certainly not since we've started seeing some of the weaker economic data lately. I'd like to see it maybe punch the market a little bit lower if we get a strong GDP number tomorrow morning, and then cover or get long and run for the long weekend. I guess the weather's supposed to be pretty nice here in the Midwest finally this weekend. I imagine by 10:30 when London closes tomorrow, the markets should be pretty quiet. So maybe time to plan a kind of 2.5 day weekend. So, all right, guys, that's the plan. I wish there was more to talk about here, but there isn't, and we just have to deal with what we got, unfortunately. So, buy dips, sell rally, trade them like a local, and keep an eye on some of these other markets for trading opportunities. Have a great night.